Number 3 is lending and a little bit of working capital. But lending, business lending, there's like different names: business credit, business financing, business debt. All that means is just lending, right? And one of the most important things about lending, and most times entrepreneurs, when you hear the term like access to capital thrown around, I need access to capital, everybody thinks about business debt, business loans, and private equity and VC or equity financing. But lending, it's really more important to know about the purpose of the loan, right? And in my like 20 years of banking, like I've had a ton of people say, oh, I need a business loan. What can you do for me? And just like the first question is like, what do you need it for? Like, what's your purpose? And a lot of times entrepreneurs are unaware what they actually need it for. They just think they need it for some type of reason, which could be true, or it could not be true. It just depends on the purpose, right? Another important thing about lending is evaluation of financials. There's a lot of like misinformation stating that you could get business lending with no credit and no track record and no business and this and that. So there's always a financial metric or some type of number that the lender is looking for to lend money, right? Almost all lenders, actually, I could probably say 100% of lenders want to be paid back, right? So it's just like you, like lending money to a friend, right? Like, yeah, I want to be helpful. I want to be helpful to Monica. Let me lend her this money, but like you do want to be paid back, right? But like you want to be paid back. So just like you're lending money to a friend, business lenders have that same desire. So it's always important for entrepreneurs to know like what that is and what do you want, like what's the lender looking for? Are they looking at, and it may be your financial statements, the ones we talked about, income statement, balance sheet, right? Cash flow statement. It could be your receivables, right? Money that you have coming in that you haven't received yet. It could be the value of your equipment. It could be, a whole bunch of different things. So there's always some type of measurement that lenders are using. So that's a misnomer. But basically, there's a difference between long-term and short-term debt, right? Long-term debt for most people comes in examples of like a house, right? You're buying a house, you're not paying all cash up front, usually financing that through a mortgage. It's long-term debt. A car is long-term debt. Things that take you multiple years to pay off. So the definition is defined by time. So a long-term debt is any business debt that is expected to be paid back more than a year. And short-term debt is anything less than 12 months or less. So short-term debt, payroll, maybe operations, maybe a certain piece of equipment like a computer or phone or something like that you're planning on paying off in a short amount of time. That could be short-term debt. So the different forms of lending there's many different forms. I don't want to get into too many specifics, but typically for long-term debt, it's financed by a term loan, right? It's a fixed number of payments. Could be a fixed payment too. It's like a fixed period, and it's usually like a fixed rate. Usually, it can vary, but that's most long-term debt. Short-term debt is usually financed through a line of credit, right? And a line of credit is just available pool of funds, similar to your credit card, except that line of credit can be used as cash. So you can use it for payroll. You can use it for, that small piece of equipment that you're going to pay off in a couple of months. But for business purposes, like you have the differentiation between those two things, which kind of goes into working capital. So the short-term debt funds working capital needs. So you'll hear often working capital, and that's just talking about, and the word working just symbolizes the fluidity of the money. So that's that cash flow cycle again. The fluidity, money coming in and it's working for the business in some type of capacity. So just to recap, lending, looking at the purpose of your loan, thinking about what metrics or financials are used to evaluate it, and then long-term or short-term, which facility is the best one. Top 5, again, cash flow and financial statements, private equity and venture capital, lending, valuation and multiples, and the last one is revenue and business segments. So there's a lot more that goes into all of these different aspects. Again, it's really having your partners by your side so that you are not expected to be the expert in all of these different spaces, but you know these things and you can have that confident conversation. If you're speaking with an investor, you're speaking with that potential partner, you're speaking with that vendor, that client, whoever your banker, right, or lender, it just equips you to be better prepared.